Okay, the next section that I want to cover is the Option IQ software training. So this is where we're going to actually go through and teach you how to use not just the paper training, but all the different bells and whistles that exist within the software. So to begin with, I just want to cover the Option IQ motto, and this is something that I want to kind of imprint on everybody, on your mind. The motto is very simple, but it's also very, very important. It says, discipline, follow the rules at all times, patience, wait for the market to come to us. We're not going to go out and force trades. We're going to do what we're given. And then caution, monitor trades daily. So this is really the Option IQ focus. Once you're in trades, once you're using the software and you're in a live trade, you need to follow this exactly as it is written. The key is we don't want you to be, straying from the rules or going off and trying to do your own thing. Remember, the software has been set up as a system, and the system works when you follow the system. If you go out and you are not following the system the way it's set up, then there's no guarantee that it's going to work the way that it's meant to work. Okay, as far as ways to trade your account, so using the software, you can do what's called a self-directed account. And essentially all that means is you're in charge of everything. You go in and you set up your account, and you basically, you're in charge of all the different things that you do each and every day. So you go in, you find your trade, you enter the trade, and you exit your trade. Okay? But while doing all that, what we recommend our customers do is actually use the following. We have what's called the Quick IQ trade for entering trades. We also have automated exits for exiting trades. Okay? So we really have two different things here that that can help you in entering and exiting trades. So even though you want to do this self-directed and you want to be in charge, the Quick IQ trade can help you get into trades. And it's actually real simple. We'll talk about it in a moment. And then the automated exits you can set up, and you can utilize those as well. So automated exits, depending on the broker you're using, you can actually set it up and it'll automatically take you out of a trade that you're in. And then the other option besides the self-directed option is what we call the IQ directed. This is where you're doing what's called hands-off. In other words, you fill out a power of attorney form, a letter of direction, so to speak, and once you fill that out, this allows Option IQ to actually choose the trades, set the trades, manage the exits on your behalf. And we're doing all of that based on all the rules and guidelines that we've talked about. So again, there's no difference in cost to do this. So the question is, do you want to do the self-directed approach and do it on your own, or would you rather do the hands-off approach? Now, because you're going to be working on education and you're going to be going through more classes and learning how to trade, this might be one of those things where you just set it and forget it. You set up the IQ-directed hands-off approach, and you go focus on learning how to trade while we're helping all this happen for you. So again, those are the two ways that you can set this up to trade the account. So let's just quickly review the entry rules that we talked about earlier, and then we're going to go into the software and walk through it. So the entry rules, number one, is set a trade with a less than or equal to 7.4% P factor for the call side and less than or equal to 9.4 for the put side. So that was rule one. Rule two was buy options for protection. Depending on what strategy you're using, you might buy inside protective options or outside protective options, or a mixture of both. Number three, you're always going to set trades between 30 days remaining and no more than 75 days remaining when you enter the position. And rule number four, you're always going to choose trades with the TVI value of over 30. Okay, again, those are our entry rules. As far as our exit rules go, very simple. Each day we're going to exit the trade if it reaches a 40% probability factor. I shouldn't say each day. If it hits a 40% P factor, we're going to exit the trade. But we're going to monitor them each day to make sure that they don't reach that level. Rule two If any of our trades hit 70% of the targeted profit amount, then we're going to consider exiting based on some of the guidelines we talked about earlier. And rule 3, if we hit a proximity, in other words, if we get too close to our sold call or sold put within 10 points or closer within the last week of the trade, we're also going to exit early. Now keep in mind, there was an additional rule for exiting, and that was only on Eagles. That's if you reach 125% of your targeted profit amount that you should exit that trade early. So those are the exit rules as well, just as a review. Okay, so if we go in today and we get on to the software and we want to select a trade, all the trades that are on there, the preferred trade, the iron condors, the eagles, the hybrids, all of the trades that are listed on the Option IQ software or platform follow the rules, except for 2 exceptions. The 2 exceptions are, number 1, days to expire and the TVI percentage. So days to expire, you're still going to have to double check and make sure that it's got more than 30 and less than 75. Otherwise you won't enter it. And the TVI, you got to check and make sure that's greater than 30. Otherwise you won't enter it. Other than that, all those trades follow the rules. The only thing that is not taken into account is the volatility index. That's only taken into account on those preferred trades. So when I go in and I'm ready to set a trade, a live trade in my account, I'm going to choose the preferred trade if it's available, and if it's diversified, and we'll talk about what diversified means a little bit later, but I don't want to set the same exact trade or strike price twice. So I want to choose the preferred trade if it's available and if it's different than what I've already got into. And also remember that those preferred trades are going to be a little bit wider spreads based on that volatility. So they'll have that preferred time frame and strategy already built into it. The next thing you're going to ask yourself when you're looking at those trades is, can I afford to take the trade? Option IQ suggests never putting more than 7 up to 10% of your account value into any one trade. So if I have $10,000 that I'm trading with, I'm never going to put more than $1,000 into one of those trades. I could go $700, but we know that really the minimum trade's about $960. So you're going to spread out your capital with 7 to 10% of your account value into any one trade. You're also going to diversify depending on the size of your account. So if I have a really large account, I'm going to be able to get better diversification. I'm going to be able to do about 7 to 8% of my account in any one trade. If I have a smaller account, I'm going to just have to stick to the 10% per trade. And again, that just has to do with, the more money you have, the more trades you can do, the better diversified you can get. The less money that's in the account, the less diversified you'll be able to get. But you'll still be able to get at least 10% or 10 trades on, so your money's spread out 10% per trade. So that's the next thing you're going to ask is, can you afford to take that trade? Also, what you have here is what we call the account summary, and it says RJO. RJO is the clearing firm that Option IQ uses if you decide to trade with us. If you decide to trade with somebody else, then you might not be using RJO. But on the Option IQ software, if you have an RJO account, you will actually see your account summary. This will tell you how much money's in your account, what's available to trade with, how much money you have in trades. It's going to give you all of that information in one place. So this is kind of where you're going to go every day to see what's happening. So if I go here, I can quickly see how much money I have available to trade with. Right now, that number is under excess capital, shown in green. So it says I have $11,484.69 that I have available to trade with. Everything else is already tied up in trades. So that's the amount of money. So if I'm going to place a trade right now, I want to make sure I have enough money to place it. That's where I'm going to look. And that's going to be found this can be found on your active trades page, or it can also be found under your, your dashboard page. All right. Also, when we're going in and we're getting into a trade, one thing we always want to make sure of is that the amount of money that we have to have for the trade is based on that cash required number. So here I have a screenshot of the software, and I'm showing you where that number is. So if I'm trying to figure out, do I have enough money for this trade? Well, I go look at my account. I see my statement or my summary. I can tell how much I have to put into new trades. But then I've got to refer back to this screen, and I've got to look here where it's highlighted in yellow, and I've got to ask myself, do I have enough to do this one? So margin or cash required is that deposit. We've talked about it before, but this is just kind of a review. We're going to look at that number and make sure we have that available in our account that's not in any other trades that can be used as a security deposit for this trade when we place it. The next slide talks about time range. Okay, so when we're setting these trades, another thing I want you to keep in mind is that you want to trade your account across 2 different months. You don't want to put all your money in just one trading month or one expiration period. You want to spread it out over 2. So what we recommend is 50% of your account goes in the first month. So whatever month that you're trading, you're going to put about 50% of what you have in your account into that month. The other 50% of the account, we recommend having that go out into the next month out so that you always have money kind of balanced within the 2 months. The reason for that is you always have trades expiring each month. And when trades expire, we have the opportunity to collect a target profit if they expire within the boundaries. So it'd be nice to be able to collect target profits every month as opposed to every other month. So that's why we're trying to kind of help you spread out your money over 2 different months. The other reason is for diversification. If I've got some money in this month, I want to put some money in next month because anything could happen between now and then. So we're going to spread out our money that way as well to help us with diversifying. So entering orders. What I want to talk about now is, following everything we just went through, how do we go in and place a live trade? Okay. Now, the primary way to place a live trade is using what's called the Quick IQ trade. Quick IQ is where we send you a trade recommendation via an email or a text message, and you go in and accept that trade, saying, yes, I want this placed in my account, by simply typing in a PIN. You can do it through a text, you can do it through an email. As long as you respond or reply with that PIN number, or type in the PIN where it asks you, then it will actually go ahead and set that trade in your account. Now, the nice thing about the Quick IQ trades, they're not going to be sent to you unless it's a trade that's diversified in your account. So it has to be a trade that you don't currently have, that's got the diversification, that's helping you spread your money out over the 2 months. So that's what the Quick IQ trade is. In a matter of seconds, you can have a PIN number that you've created typed in, and we'll go ahead and set the trade on your behalf once you do that. Now again, that's if you're working with the Option IQ broker as opposed to using a different broker. The alternative way to place a live trade is just using the platform, the trading software. Or you could pick up the phone and phone what we call your personal trade representative. So each of you will have somebody that knows the software inside and out that you can contact at any time if you've got questions about the software or one of your trades in the software, and they can help you with that. So that's your personal trade representative. So again, you could call them and place the trade over the phone as well if you'd like. So that's how you're going to enter a live trade. As far as entering live trades, there's 2 different types of orders that you can use. There's something called a packaged order, and there's something called legging in and legging out. Now, a packaged order is how we typically enter trades. This is where you get into the entire Iron Condor or the entire Eagle trade all at the exact same time, where the entire trade has the opportunity to get filled or it doesn't get filled. So either you get the whole thing and you're in the market and you're starting to monitor it, or nothing gets filled and you didn't place the trade. The other way of our order type is what's called legging in and legging out. That's where you choose to get into only part of the trade right now. So you might choose to just sell your calls and buy your call protection right now and not choose to do anything on the puts. Now, why would someone do that? They would do that simply because they're trying to time the market. Maybe they feel like the market's going to drop and they want to wait and place their puts after the drop happens. So again, you have the ability to also leg in and out of these positions through using the software. So depending on how you're going to do it, you can use one or the other, and I'll show you how to do that. Okay, so let me show you how you're going to enter a live trade. So we're going to go to the software, and you're going to log in, which I've already done, and you're going to click on My Trades and Set New Trade, and this is the page that's going to come up. Now you'll notice the page that's come up shows all of the live trades, okay? So everything over here on the right-hand side says live under this trade column. So now I have the opportunity to set a live trade. First and foremost, I'm going to stick to the preferred trades because that's what we've recommended that you do. So the preferred trade for today is listed here. It's the E-mini S&P 500 end of month. It's got 58 days. I see my probability factors, the market's price, what my strike prices are, how much money is required as a security deposit or margin to stay in the trade, or get in the trade and stay in the trade. How much is the net target profit, the percentage on cash, the TVI, and then all I've got to do is click that little live trade button. So all I'm going to do for this is click the live trade button, and it's going to bring up the actual trade so that I can see the trade here. So once I get to this screen, I have the opportunity to make a few changes or a few adjustments. Now before I do that, I'm just going to drop back here to our next slide, and actually before I do that, let me talk about packaged orders and legging in. So a packaged order is the way this is set right now. If I don't do anything, I come down, select my account number, and click Set Trade. This will be set as a packaged order. The reason why it's a packaged order is because I'm selling a call and a put and buying a call and a put. So I'm doing everything simultaneously. Now, if I wanted to leg in, which we spoke about a moment ago, and I want to try and time the market, I could actually go in and I could say, I'm going to enter the call, but I'm not going to get into a put, and I would zero out that put on the software. And then I would say, I'm going to get into my call protection, but I'm not going to buy any put protection, so I would zero that out as well. Then I would come down, I would select whatever account number I'm going to place this in, and I would hit recalculate. And it asks me to select lenience, which I'm going to get to in just a moment. So I hit recalculate, and now it recalculates based on the change that I've made. Okay? So, even though it's still showing both positions over here, it's recalculated here, and I'm only going to enter this top section. Okay? This is just showing the original trade, but I'm only going to get into the top portion. Once I get into that top portion, I'm going to be able to later on, through the software, come in and put this lower portion on. The difference is this might be even lower by the time I decide to enter those other legs. So this is legging into a trade. All you're doing is choosing to only get into part of it and not get into all of it. So I'm going to go back and hit Reset to Model. So this takes me back to the original trade that we were looking at before I made any changes. And now I have the opportunity to actually set this trade live. So I'm going to go back and look at a slide here, and we're going to just see what it says, and then we're going to go and show you how to do what it's telling us to do. This slide is titled Directions for Broker Entering a Trade. Number one, select the trade. We've done that. Number two, select the quantity based on the diversification model. Well, we're going to do just the preferred iron condor, so the quantity could be 1 or could be whatever we want. Then it asks us to enter the settlement price or a live quote. And then it says, with desired lenience from the drop-down list. So just stay with me. I'm going to get and explain this. Then we're going to select an account number. Then we're going to verify the order and set the trade. So first and foremost, let's go back to the software, and I'm going to show you that we've already selected the trade. Now we can choose to do as many as we want. If I want to do more than one of these, I could change this to 2, and it'll change on all of them. And I could hit recalculate after I change this box to 0 here. and it recalculates doing 2 instead of doing 1. So now all my numbers change based upon doing two of these trades instead of just 1. So I'm going to hit reset to model and go back. So you're going to choose the number. In this case, I'm just going to do 1 for this example. The next thing I'm going to do is I'm going to try and figure out what price I want to get into this trade at. Now, everything that you see on the screen right now is based upon where the market settled today. So I can go and place this trade right now because the market's a 24-hour market, the index futures index, and it's already reopened. So I can go in and place this right now. However, and by the way, it's in the evening right now. It's later in the evening. So I can go place this right now, and it can go in and fill tonight, or it could fill tomorrow if I wanted to put it in tomorrow. But the point is that the numbers that are listed here, the prices for total points, the prices that I'm selling my call and my put for, the prices that I'm buying my call option or protection and my put protection for, all of these point values are based on where the market settled today when it closed for that 15 minutes. So even though it's reopened, we do not have a live quote sitting in here. Now you can call your personal trade representative and ask them for a live quote, or you could go get your own live quote off a quote stream. Or you could choose to set the trade with these numbers and just give a little bit of what we call lenience. So lenience is if we get these points, we're going to try and make 1.5 or 1.55 points for this trade. But what happens if we go in to place this trade? We're going to get into a live trade. We're about to place it. There's no guarantee exactly what price we're going to get because the market is constantly changing. The prices are constantly changing. So we want to be able to have a chance of getting into this trade and not have to sit and adjust our prices all the time. So what we've given you is this little drop down called lenience. When you click on this little box, it brings up a number of choices. For me, I'm just going to use this 0.1 or 0.1 choice. So I'm going to use a little bit of lenience. Essentially what I'm saying, and I hit recalculate. Whoops, I've got to select my account number. Then hit recalculate. What I'm saying is, guess what? I want to get this trade filled. I'd like to get it filled at 1.55 points. However, if that price can't happen, I'm willing to take 1/10 of a point less, or what's shown here, 1.45 over here on the right side of the screen. They'll also take the commissions out of this. So ultimately, if I get in without having to give any lenience to get the order filled, I would have a net target profit of $56.50, 6% on cash, 37.7 for my TVI. If I give the lenience, or have to give the lenience to get it filled, but I'm filled with that lenience, then I would get filled at 1.45, 51.50 would be my net target profit, 5.5% would be my net on cash, and 34.4 would be my TVI. So obviously, lenience is going to cause your trade to make less net profit or net target profit. However, lenience might just be a necessary evil. In other words, if you don't use lenience, you might not get the trade filled. So we recommend to all of the members that use our software to use at least some lenience when you're getting into a trade. All you're doing is giving a little wiggle room so that when that order goes into the market and it's working electronically, if they need to, or if you need to give a little bit of lenience to get the order filled, the permission's already been granted, and they can adjust the order automatically within the order entry system. So, again, I want to make sure that everybody understands what that lenience is. So that is how you select the lenience, okay? So once I select the lenience, I also had to choose my account number. I can also name the trade anything that I want, but it's already been named here for me. So ultimately, this live trade that we've just set up here, and we've kind of, messed around with, we can actually set this right now in the live market. So, before I do that, let me just make sure that we covered everything. So we talked about the trade, we talked about the quantity, we talked about the settlement price or the live quote. So again, if I go back there, if I don't use lenience, so if we choose not to do this lenience drop-down box, and this is 0 instead, I could actually get a live quote and plug that live quote into these boxes. So if I got a live quote and maybe this was only 1.4 instead of 1.35, and this one had changed or whatever, once I put in the actual live quotes that I get, I can hit recalculate, and it'll actually change everything here for me. So I can put it in with real live points or a live quote here if I choose to, or I can go with what was originally there, which I'll hit recalculate, plus a little bit of lenience to give me some wiggle room, and I'm able to hit set the trade there. So again, depending on your preference, you can do it that way. So last but definitely not least, when I click set trade, I want to kind of double check everything there to make sure that everything was correct, because when I set this live trade, it's a trade that's going to go in my account. So once I hit set trade, the screen will come up and it'll say, congratulations, you've successfully set a live trade. Confirmation email's been sent to you. Your trade will be in pending status until it has been confirmed. Okay, so until you actually know that the trade's been filled in the live market, it's going to stay in this pending status. And then you're going to have to go in and essentially confirm it, or depending on what broker you use, the Option IQ broker can actually go in and automatically confirm this for you and put the trade under the active trade section. But for now, this trade lives under this unconfirmed trades and exits page. So right now I actually have two different trades that are pending pending execution. So right now these trades are being pushed out into the market with the opportunity to be filled, okay, or that trade that we just set. So that's how you set a live trade, all right? If the trade is not filled, it will be permanently deleted. So if I went under my trades and go into active trades, it won't even show up. It'll be as if I never placed the trade. If the trade actually gets filled in the live market and I go in and confirm it, it'll show up under this active trades page. And so if you click on the active trades page, it'll bring up all of your active trades and it'll display all that information in your live account. The next slide is selecting a trade. And so what I want to show you here is how to go in and actually choose a trade from the trade screen. When we go into the trade screen, all of the trades that are listed there on the Option IQ trading platform follow the rules. And what I mean by that is they follow all of the criteria that we want you to use while you're getting into a trade. The only two exceptions to this are the following. Number one is days to expire. So if you remember back earlier on, we talked about trading between 75 and 30 days, never going under 30 days. So you're going to see some trades possibly on this screen that drop under 30 days. Now, even though we're listing those trades, we do not want you to take them. The reason why they're there is because we have some of our software users that want the ability to take trades under 30 days. So we're still allowing that. We're still posting those trades, so to speak, but we would rather have you obey the rules and set trades that have at least 30 days and no more than 75. And then the other exception is the TVI percentage. And if you remember what TVI stands for, it's time value index. And so what that is we want to make sure that whenever we're setting a trade that the TVI on the screen is at least greater than 30. Now let me just jump to the screen real quick, or to the software, to show you this. So let me just pull up my software. And here are the trade screens. And everybody remembers when we get here, everything on this screen follows all of the rules. And the only thing that we're going to look at by way of exception is going to be the days to expiration, this column right here. So if I go down, there's a trade that's under 30 and there's a trade that's under 30. And all the other ones below that are between 30 and 75 days. So all we're saying is avoid these ones that are under 30. The other thing you're looking at is the TVI, also known as time value index. You'll notice here on the software I've got my mouse over that column, and you'll see each one of the TVI percentages. Now, all we're asking you to do is make sure you never select a trade unless it's greater than 30. So as you can see, everything on here is actually greater than 30, minus the one down here at the bottom, which is just barely 30. So I would still probably take that one, but you just want to make sure that the TVI column is at least 30 or more. All right, back to my slides. The next thing I want to talk about is selecting the trading model, okay? So every single day when we go in and we're looking for the trading model, the first thing that we want to do is we want to look for the preferred trade if it's available. The preferred trade, as we talked about earlier, is always going to be listed at the top of the screen, the Set New Trade screen. If that's available, that's the one that we're going to take. We would prefer you always to take that trade as opposed to going down and taking the other ones. And remember that these preferred trades are always based on volatility. So we talked a little bit about volatility, but essentially when we go in and set a trade that's a preferred trade, it's based on our volatility guidelines. And so we just want to make sure that everybody knows, first and foremost, if you can get a preferred trade, take a preferred one. If there's no preferred trades there, then the second best thing to do would be to take one of the trades that has greater or has the greatest amount of time remaining until it expires. Okay? All right. Next question you're going to ask yourself when you're trading and trying to take a new trade is, can I afford to take this trade? And as a company, we suggest never putting more than about 7 to 10% of your trading account that you have utilizing the software. Never put more than 7 to 10% of that account into one trade. And essentially, we're splitting it up based on whether you have a large account or a small trading account. A small trading account might be something like $10,000. If you're using a larger account than that, we're going to recommend, the more money you have, the better you can diversify your trades. We're going to recommend that you spread out your trades so that you're only putting 7 to 8% of your account value into any one trade. With smaller accounts, because it'll be a little more difficult, we're going to recommend 10%. So essentially what I'm saying is you're never going to have any less than 10 trades per period of time that you're managing, because you want to make sure that you're only putting 10% of your money at risk in any one trade. With a larger account, you can spread it out a little bit further. Okay? Now, the best way to find out how much you have in your account is to look at what's called the RJO account summary. Now, you're going to see this slide. It's going to pop up on the on the active trades page is where you'll see this, and you'll also see it on the dashboard. But this particular account summary is going to tell me exactly how much money is in my account, where all the money is invested, and most importantly, it's going to show me something called excess capital. This amount of money, this $11,484.69, represents the amount of money that I can put into a new trade. So I have roughly $11,500 that I can go and actually use to invest in a new trade. So again, that's where you're going to know exactly what's available to use, and then you can go and work that into a new trade. Next, let's talk about margin, or the deposit that is required. So margin, or the deposit, is an amount of money that is required by a broker or a brokerage firm to initiate or maintain a trade. So every time you go in to set a new trade, depending on that trade and how it's set up and what types of options you're selling and buying, you're going to have a certain amount of what we call cash required. The cash required amount is shown here. So this is on the setting a trade page. When you go in to actually set the trade, you will see this little column that I've highlighted in yellow here called cash required. This number is actually going to tell you what's going to be needed for that trade. So if I go to get into that trade today, I have to have $7,548 available in my trading account in order to be able to place this trade. If I don't have that money available and I go and place the trade, then the broker or brokerage firm is going to call me and ask me to add more money to my account. So I need to make sure that that amount of money is available. That's why we looked at that previous slide at our excess capital amount, so that we know what's available, so that then we can proceed and set this trade. Well, right now, because I have 11,000, roughly 11,500 available, I would be able to set this trade for 7,548. So that is what you're using for your cash required. Now, how is cash required actually, how do they come up with that number? They come up with that number based upon this number here, call exposure and put exposure. So on this particular trade, our maximum risk in the worst case scenario, if we didn't follow any of Option IQ's rules and the market decided to drop and just keep on going, the worst possible thing that could happen to us is we could lose the put exposure amount, which is $8,000. So what they've done is they've taken that amount of $8,000 and they've subtracted the amount of net target profit that we have, which is shown here. And when they subtract that amount out, that's what's giving that $7,548 cash required amount. So the key here is it doesn't matter what your call exposure is and your put exposure is. The market can only go one direction at a time, and you're never going to lose all that money unless you disobey our rules or the market decides to go crazy and goes up and through all of your boundaries over here and keeps on going, or goes down and goes through all these boundaries. I'm talking about some type of an anomalous event that would cause that to happen. Besides that, I can't foresee that $8,000 amount actually being lost unless you're neglecting your trades and you're not watching them and you're not getting out when you're supposed to. So the cash required, the $7,548, is going to be the required amount. And again, that's based off of the exposure amount minus the target profit. Next is time range. When I'm going out and setting trades, I'm going to want to spread my account value over 2 different trading months. I don't want to put all my money in just one month because I'll have trades expiring every other month in that particular case, especially if I'm setting trades that are longer than 50, 60, 70 days. So what we would like you to do is trade your account across 2 different expiration months or periods of time. We'd recommend putting 50% of your account in what's called the front month or the first month, right? Whatever month's going to expire next. And then putting 50% of your account in the second month. And again, you can spread that money across the different types of options, whether that's a regular expiration, a weekly expiration, or an end-of-month expiration. Entering orders. Okay, now we're starting to get to the exciting part. Now I'm going to teach you ways to place a live trade. And we're actually going to go in and go through this process. So real quick, there's really 2 different ways you can place a trade. The first, or what we call the primary way to place a trade, is using our Quick IQ trade. And I'm going to talk more about that in a minute. It's essentially, we send you an email or a text message, and it says, here is a trade that fits within your account. It fits the diversification guidelines. It follows the rules. Here's the trade that we recommend for your account today. If you want that trade, all you've got to do is say, yes, I want it. You basically click on a little link or a little button, and it will take you to a page where you type in your personal PIN number, which will help you set up. And as soon as you type that in, our system will automatically set that trade for you. So we'll talk more about that in a second, but that's the primary way to place a trade. You also have the alternative way, which is using the software, actually going in and logging in, taking a look at everything and setting it there, which we'll walk you through. And the alternative is, another alternative is that you can phone your personal trade representative. So as I said earlier, each of you will work with a dedicated personal trade representative that's going to help you with the software, make sure you're setting trades correctly, make sure the trades that you do have live in the market are doing okay. So that is another alternative. Those are kind of 3 different ways. Now the types of orders that you're going to be placing within the software, you can place what are known as packaged orders, or you can place what are known as legging in or legging out. And what I mean by that is, first, the packaged order is getting into the entire trade. So at this point, you already kind of understand what our trades look like. If I go in and I want to sell a call and sell a put and buy a call and buy a put, that's considered to be 4 different legs within the trade. Now normally, if I just went in and placed that order, I would have to get into each leg or each option separately. But what we've done is we have the software that can execute the trade, depending upon which broker you use. It can execute the trade automatically and put all of those legs in at the same time. In other words, it sells your call, sells your put, buys your call, buys your put, all as one order. So that's the beautiful part about using a packaged order, and that's primarily the way that we want you to enter your orders. The other way of trading is legging in, as I kind of explained before. So if I want to just get into part of the trade, and then I want to see the market kind of do its thing, kind of maybe wait for a while before I get into the other part of the trade, I can do that using what's called legging in and legging out. And I'll go through some demonstrations of that on the platform here in a second. Okay, so the next slide is directions for broker entering a trade. So what I'm going to show you now is actually how to find a trade and then how to actually set that trade, all right? So what we're going to do is we're going to go through this step by step. So number one, we're going to find a trade. We're actually going to go in and select the trade that we want to set. Number two, we're going to select the quantity. How many of those trades do we want to do? Do we want to just do one of them, or do we want to do 2 or 3 or 10 or 20? So we've got to select the quantity. Next, we're going to put in our pricing. So if I'm going in and trying to get the trade filled, am I going to use live quotes or live data, or am I going to use an estimate? We're going to show you how to go in and actually enter the prices to get into these trades. Then you're going to use an account number, so you're going to have a live account set up to be able to do this process. And then lastly, you're going to verify the order and set the trade. So what I'm going to do is I'm going to walk you through this process on the software. Okay, so now we are on the software, and just to let you know where I'm at, I'm under the My Trades button, and I clicked on Set New Trade, and that brings up this particular screen. Now, if we remember back to what I just talked about, we're looking first for the preferred trade. And as everyone can see, there are preferred trades shown right here at the top of the screen. And there's 2 different months. There's the October trade and there's the November trade. October has 51 days until it's over, and November has 72 days. So depending upon you and which trade you want to set, here's where you're going to choose that trade. Now, if I've got some of my money already in October, or most of my money is in October, the 50% we talked about, and I want to put some money in the next month out, then I would choose the November trade. So let me show you how this is to be done. Come in here and click on the little live button over on the far right-hand side of the screen, and it will bring up the Setting Live Trade screen. This screen shows us all of the details of this trade. And I know we went through this before when we covered setting a paper trade. But everything that I see here is telling me about this trade. And really all I care about is if I get into this trade, I'm going to have $943.50 available in my trading account. As long as I have $943 available in my trading account, I can set this particular trade. And the next question is, what is it going to make me, what's my net target profit? If everything goes well and this trade stays within the range, what do I stand to make? Here it says $56.50, which is 6% on my cash in 72 days, and a time value index of 30.4%. So again, this trade looks good. This is a trade that follows everything we've talked about. It's between 30 and 70 days. The time value is just above 30, barely, but this is a good trade for us to choose. So in order to place this preferred trade, all I have to do is really a couple of things. First, I have to come down and I have to select an account number. And for this, I'm just going to choose a test account number. Actually, excuse me, I have to choose a live account number. I'm sorry. For this, I have to choose a live account number because we want to place this in the live market. This is a real trade that could go out and be placed. Next, I can name the trade. Right now, the trade has a name, C, which means Iron Condor. 1775 is where I'm going to sell my puts. 2120 is the strike price where I'm going to sell my calls. So this is the trade name, and I can change it. I think you have up to 20 characters. And then the last thing that I need to be aware of here is what price do I want to get into this trade at? Do I want to use a live quote from the market right now? Or do I want to use an estimated price? Now, most of our customers or members use an estimated price. And the reason being is because they get into the trade either in the evening, maybe around 5 o'clock, or, and that would be about 7 o'clock Eastern time, or they get into a trade early in the morning about, let's say 9:30 Eastern time, 9 to 9:30 Eastern time. So because our customers are working into trades at those times, the live market isn't open, the live stock market, but the futures market is open. You could still try and find a quote during that time, but we believe it's actually easier to just put in an estimate and put that price in. Let me show you how to do that. So first I come in here and I see net points, and then I see a number 1.55 shown here. That is the price estimate based upon where this trade and where the options in this trade finished yesterday. So all the prices as of yesterday when the real market closed, it's actually giving me an estimate of where I could get into this trade right now. Now, if I choose to go down and add any lenience to the trade, that will lower this number. So because this number is just an estimate, there's no guarantee that I'm going to have the trade executed at those prices, at that value. So what I need to do is I need to decide, do I want to add some lenience or do I not want to add lenience? We recommend always using some type of lenience. So for this trade, I might go in and say, I want to choose a 1/10 of 1 point lenience. So I select that amount from the drop down and I hit reset, or actually I hit recalculate. When I recalculate the trade, you'll notice that the software now says if you have to use 1/10 of a point, or basically 10 cents of lenience to get this trade filled, instead of making $56.50 or having that as my net target profit, I'm only going to be targeting $51.50. So there's a difference here of about $5 on this screen. What I am doing is I'm essentially giving a little bit of wiggle room, a little bit of, I'm taking an estimated number, what I think I can get in at, and then I'm giving a little bit of wiggle room to get that trade filled. Again, you don't have to give lenience, but for those of you that do not give you lenience and you're not using a live quote number or a live quote, you're probably going to have a hard time getting filled. You need to give a little bit of wiggle room in order to get these trades filled. And the reason is because once these are being executed in the live market, the market's constantly moving. So we're giving ourselves a little extra chance to be able to get into these trades at a good price, but we've got to give a little wiggle room in case they need it to get the trade filled. So all that does is it calculates everything based upon that information and then allows me to go down and set the trade. Now, one other thing I wanted to talk about, so I'm actually going to hit reset to model. One other thing I wanted to talk about here was setting the trade as a packaged order or also legging in or legging out. Now, this particular one, we're entering the trade, so we'd be legging in. To do a packaged order, we change absolutely nothing. We let the screen stay the exact same. You'll notice here we have one call, one put. Those are the ones that we're selling. We have one call that we're buying and one put that we're buying. So right now, if I set this trade by just simply going down and clicking the Set Trade button, after I'm happy with everything, this will execute as a packaged order. I'll sell the call, the put, buy the call and the put, all as one order, if they're willing to take the price that I've put in. And then that's another reason why you add lenience. So if everything gets executed, you're in the trade and you got the price you wanted and you're off and running. If they cannot get your price, then the trade will not be filled. In other words, you're not going to get into part of the trade and have the other part of the trade not execute or not filled. You're going to either get into the whole thing or none of it. So it's kind of an all or none type of thing. Now, how do we leg in? Legging in involves actually taking away some of these numbers. So if I wanted to just get into my calls and I wanted to wait on my puts, I could put a 0 in my put column here and also put a 0 in my put column down here. So now instead of selling one put and buying one put, I'm choosing not to do either of those. I'm actually saying I want to do 0 of those trades. What this is going to do, it's going to create an order to sell a call and buy a call. I'll be legging into the top side of my trade, but the bottom side of my trade will still be not being set. I'll have to set that at a later date. So that is how you would choose to go in and leg in to one of these trades. Now, because we're doing this as an entire trade, let me actually reset this. I'm going to add one here and one here. We're going to really set this trade. So again, I select my live account number. I make sure the trade name is what I want it to be. I would select lenience if I want that lenience to be there and hit recalculate. And last but definitely not least, I would go in here and I would click the button that says Set Trade. As soon as I've done that, this live trade will now go out and be executed. You can see my screen says, congratulations, you've successfully set a live trade. It's going to send me an email, and all I'm waiting on now is for the trade to be executed in the live market. This could happen right away, or it could take it a while to happen, again, depending on the price and the lenience that I was willing to give. So that's how we're going to enter orders. Let me go back to my slides now. What I want to talk about next is the preferred way of setting a trade. We call that the Quick IQ trade. And you can see this slide has quite a bit of information on it, so let me just go through it with you. The Quick IQ trade is that trade that is sent to you every day that there's a trade that matches your account. What I mean by matches your account is the trade has to follow all of our rules and is typically a preferred trade. And the trade also has to fit as far as diversification goes. You're never going to set the same trade twice within the same month or same period of time. We don't want you putting all your money at one price in the market. We want you to spread out your trade over different strike prices to create diversification. So, the Quick IQ trade is always going to make sure that the trade it's recommending to us, the call side of the trade, we're never selling the same call twice. It's always going to look for at least 5 points difference or diversification for trades that have more than 15 days to expiration. Now, it looks like there's a little typo on my slide. Then on the puts, it's going to look for 10 points of diversification on trades that have more than 15 days to expiration. So again, it's going to be looking for a minimum of 5 points on the top and a minimum of 10 points on the bottom, different than from all the previous trades that I've set that are still live. So this system's taking care of that diversification for you through the Quick IQ trade technology, and it's recommending that trade based upon that information. So here's really the benefits of utilizing Quick IQ. You're going to get potentially more diversified in your account than if you did it on your own. In other words, if you use the software and automate this through the Quick IQ trade, you're potentially going to be more diversified than doing it yourself. It's also going to take a lot less time. I can tell you that right now. It also says you'll have more active account, so it'll minimize lost trade opportunity. In other words, you're going to be trading as much as is possible for your account to trade. And as we all know, when we're trying to make rates of return each year on our account, the more that we can be trading that account and getting new trades set in our account, the less that our money is idle and just sitting in our account. So the quicker we can utilize that money once it becomes freed up from a trade that we've closed out, the better. We want to be able to get that money working for us. And then the third point is it has quick response, and it allows for the order having overnight exposure to the market. So if I get a Quick IQ trade and I go in and I select, I click on the link and I type in my PIN, it's automatically, very quickly going to respond and tell the broker, again, depending on the broker you're using, it's going to tell the broker to execute the trade in the live market. So again, it's going to save you quite a bit of time using that. So that's why this is kind of the preferred method. This is what the email or text message would look like. So you would actually get a text message on your cell phone, and you have to go into the admin section here of your account to set that up. But you'll set up the the text, which is here on the left, or you can also set up email, or you can have both. But essentially, when it sends me a text or an email, it has just a little link. It tells me a little bit about the trade in the email. The text, because it can't go too many characters, it actually just gives me a long link. So I go in and I click on that link in either spot, and it brings me to this. This page is where I'm going to type in my PIN. So it'll say Quick IQ Trade, enter your PIN. Each one of you are going to be able to create your own PIN so that it's personalized. You'll type that PIN in, you'll click Submit Trade, and automatically that trade will go in to be and essentially be sent out into the live market to be executed just like that. So this is the way to do it. For those of you that want to be super ooper involved or super duper ooper involved, you can still do that, but I would still recommend using the Quick IQ Trade just to save you time and to kind of make sure you're doing what you're supposed to be doing with your trades. You don't want your money just sitting there. Now, once I've sent in that live trade, which we did just a minute ago, or I could have sent it in through the Quick IQ Trade notifications, once it's sent in, I'm waiting for it to be filled. So now I've got to wait. It might get executed right away. It might take it a little while depending on the price. Depending on the price, it might not get executed, as we all know. We're playing that game in the market where we're trying to get the best price that we can for this trade. So you have what's called a trade fill confirmation method on the software. There's in the admin section on one of the buttons, you can go in and actually choose how to basically be notified when your trade's filled. What I mean by filled is they actually execute your trade in the live market. You can choose email, you can choose SMS, which means text message, and you can also choose phone. So once the trade actually really happens in the live market, you can get an immediate response that your trade's been filled in the live market. You can also set up automated trade alarms with the software, and this people absolutely love. I would not trade without my alarms. So here it says trade alarms. The first one is percent of target profit reaches, and here you can see 70%. You can change that to whatever number you want. Remember, we talked about getting out early because I reach a large amount of profit and I still have a considerable amount of time left in the trade. If that occurs, whatever that percentage number is, you can set an alert and it will send you an email, it'll send you a text message so that you can be notified. At the same time, you can also notify, depending on which brokerage firm you are utilizing, you could notify your broker about the same information if you wanted them to be aware. The other reason that we get out of a trade early is we hit a P factor of 40% or more. Now, some people want to have an early alert. Maybe my P factor is not at 40, maybe it's at 30, and I want to be at least warned that the trade's getting under pressure and I need to pay close attention to the trade. If that's the case, you would simply come in here and change this number to whatever you want, and it will send you, again, an email or a text message. Down here below, you have the option of selecting one or the other, and it'll give you the information or allow you to set up the alert the way you want. You could also notify a broker. Depending on the brokerage firm you use, you could also have it notify your broker. So that is how you set up the automated trade alarms. Now, once again, as we all know, and I'm just a quick review, whenever we're in the trade and the P factor starts out always less than 7.4 right now on the call side or equal to, and 9.4 on the put side or equal to. So less than or equal to, 7.4 up top, 9.4 on the bottom. Once we're in the trade and it's live, we never want it to reach 40%. If we hit 40, that means that our sold option, whether it's the call or the put, now has a 40% probability of being broken by the underlying market price. So the index price is getting too close. And it only has a 60% probability of not being broken. So that's the point where, in our opinion, it's too close to a 50-50 chance. If you hit a 40 P factor, we want you to exit the trade immediately. Again, just as a recap here, early profit rules for monitoring. If we hit 70% of our target profit or targeted profit, and we have greater than 20 days left, we would recommend getting out. 80% greater than 10 days, and 90% less than 10 days. Those are kind of the rules. We went through those earlier, but that is kind of what we want you to be looking at. The good news is you can set up auto exits for 40% P factors and for trades that reach a large amount of your target profit, and you still have a considerable amount of time left in the trade. You do all this where you set up the quick IQ trade. So underneath the site, you're going to log in, and this is under, I believe, the My Account tab. And you're going to come in and you have a tab for quick IQ authorization here at the top. And you also have a tab for setting up the auto exit. So you'll go in and it will walk you through the steps to be able to set up those auto exits. If I want the trade to automatically be closed, again, depending on the broker that I have, if I want it to automatically be closed out, if I hit a 40P factor, I can select that. If I want it to be automatically closed out, if I hit 80% of profit with greater than 10 days, I can have the software do that automatically. Now, let's talk about getting quotes. So once you're actually, in there, if you don't want to use lenience and take the number that's kind of a ballpark number and then give it a little wiggle room, the other thing is you could get quotes. You can always contact your personal trade or dedicated trading representative to help you with that. So you can either use the daily settlement price where the market closed the day before, which is kind of that estimated price, and throw a little bit of lenience in there, or you could get a live quote. Live quotes still, though, we might recommend putting a little bit of lenience on those as well, just to give you a little wiggle room to get the trade executed. Okay, let's talk now about exiting a live trade. What do I do if I've got a live trade now? It's in the market, it's been progressing, and now I need to go in and actually walk through the process of closing that trade out. How do I do that? Let's show you. Okay, so directions for broker exiting a trade. So now here are the steps, and then I'm going to show you as I go through these steps how to do it on the actual software. So number one, we're going to find the trade that we would like to exit. Number two, we're going to either enter what's called the settlement price, which is kind of that estimate price, and maybe throw in a little bit of lenience if we want, or we're going to get a live quote, okay, on exiting the trade. And then number three, we're going to choose the type of order. So when I'm getting out of a trade, I have the ability to get out of the entire trade, which is like the package where it just closes everything at the same time, or I also have the opportunity of legging out, which is where I get out of just part of the trade and the rest of the trade stays live and active in the market. And then the next thing I'm going to show you is how to verify the order and exit the trade. And then once we exit it, it's going to go and live in a section that we call closed trades. So first and foremost, let me go back to the software and let's bring up an account here. Here's an account that everybody can see. And this particular account has 14 live trades listed in it. So I'm just going to scroll down so you can kind of see that. So this account has about $70,644.93 in it, roughly. So with that amount of capital in this account, as you can see here, you have a bunch of trades going at the exact same time. And so the question is, which trade do I exit? Which trade needs to be exited? And as we all know from the training that we've been through up to this point, there's really a couple of things that we're looking at. Each day we were looking at our P factors, and each day we were looking at our target profit, or what is the return on our target. So if either one of those numbers gets to where we need to exit, then we're going to take action and we're going to get out. This particular account has some trades right now that we could take action on. So I just want to show everyone what this is. So here is the list of the 14 trades. Here is the put and call columns. You'll notice if you look at all those columns, I don't have a 40% P factor showing on any of those columns. If I go to the right of this, I also have the return on target column here, and I have 91%, over 95 there, 86, these different returns, and I even have some trades that are still in the red, as we talked about earlier. These have been trades that were just entered, and they've not matured yet, so as we know, it takes time for them to turn from red to green, as long as they stay within the boundaries. So On all these trades, there's a couple different ones I could choose to go in, and there's actually quite a few here that we could exit. If we remember kind of the guidelines, if I have a trade that's got 70% or more, so I'm looking here for 70% or more, here's the first one, 85, 87, 83, 86. So these are all less than, I guess, 90, but over 70. And each one of these trades has greater than 20 days left, exactly. So the rule was 70% of rate of target, or return on target, greater than 20 days. So they have exactly 20 days. So the next rule was 80% greater than 10 days. All four of those trades are greater than 80%, and they all have greater than 10 days left. So all of those could be exited. The key is here, if I exit them, what am I going to put my money into? I don't ever want my money to be sitting idle. So when I think about exiting a trade early and taking that net target profit and moving it into a new trade, I need to make sure that there's new trades available, okay? And that's something that your dedicated trading representative can help you with. Now, the other three trades up higher each have greater than 90%, and the rule is greater than 90%, less than 10 days, which they all happen to be just under 10 days. So any one of these trades we could choose to actually exit right now. Now, in order to exit the trade, and I'm going to take the one that's the highest rate of return, in order to exit the trade, we can either click on the trade ID over here and look at the entire trade and scroll down to the bottom and click on the exit trade button, or we could just click on the exit trade button over here. So we go ahead and we've chosen the trade that we want to exit. We click the exit button. And as soon as we do that, we actually end up getting a screen that shows us all the details of our exit and allows us to choose exactly what we want to do. When we're exiting a trade, we have the ability to exit the entire trade all at the same time, or we have the ability to come in and uncheck these different boxes. Now, let me go back and grab a different one because this one looks like part of it has already been exited. So let me just grab this top one. There we go. So this particular trade has four different strike prices. It's got the call that we sold and the put that we sold, and it's got the call protection, the outside protection that we bought, and the outside put that we bought. So we're looking at all of those options. If I want to get out of everything, I make sure that they all have that check, that little black check mark in that box. If I want to just get out of my calls only, I uncheck my puts, just like that. And then I come down and finalize everything. So I have the ability to get out of just part of the trade if I want, or get out of the entire trade. Now, if you're getting out of a trade because it's reached a large amount of profit, you're going to get out of the entire trade. If you're getting out of a trade because it's hit a 40% P factor, we recommend only getting out of the side of the trade that is under pressure. So if it's a call P factor that's hit 40, just get out of the calls. If it's a put P factor that's hit 40, just get out of the puts. You don't have to unwind the entire trade. So here we have a trade that's reached a large amount of profit. We're excited about it. We want to jump out of it. So all we have to do is come in here and essentially make a few selections or choices and then hit the exit button. So when I get to this page, I'm going to look here at my points. So these are the estimated values based on the settlement price from either today or the previous day, depending on when I'm looking at it. This is the estimate. I could get out of all the options at these prices if I tried to go in. Now again, because it's an estimate, there's no guarantee that I'll get that exact price. I might be wise to go in and add some lenience here in this box to give me some wiggle room. Now, if I'm getting out of a trade because it's profitable and I'm not having to get out of the trade, I'm not being forced to get out of this trade, I might actually want to just leave the prices where they're at and try to get out at that price. Now, what is the price? Over here on the right, it says my target was $282.50. If I use these prices, the estimates, I would make $257.50 today in today's live market. That's because this trade still has time left. There's still days remaining, so we're not going to be able to get the entire amount unless we hold it to the end. And then it tells me the time value index. It also has a calculation for lenience, but right now I haven't decided to choose any lenience. So if I go ahead and exit the trade with the estimated prices here from market settlement, then I would get out of the trade if it fills, if it's exited, and I would end up making $257.50. Okay? If I want to get a live quote, I can pick up the phone, call my dedicated trading representative, and ask him to help me get a live quote, and I could punch those numbers in here in this section. So I would have to change each one of these, and then I would have to hit recalculate for the live quote. So that's two different ways of exiting, depending on what works best for you. For me, I prefer the lenience. The lenience is really, you're taking an estimated price, you're not hassling with it, and you're going to throw a little bit of lenience in. Or maybe you don't do any lenience because you don't really care if you get out now or in 9 days from now when it expires. So maybe you leave it 0. Whatever you do, recalculate if you've made any changes, and then scroll down to the bottom, and at the bottom it allows me to also choose to mark this order as a good till canceled order. That means that I get out of the trade, if I exit the trade today or send in the exit request, if it doesn't get filled at that price today, it won't fill. But they'll keep replacing it every day until it fills. Or I would have to call in and cancel the order. So if you choose this, that's because you're willing to take this price and you want them to just keep putting it in until it fills at that price. If you don't want to do a good till canceled order, the only other order type that's on here is what's called a market order. If I click on market order, what happens is I'm placing this trade to get filled at whatever the best price is right now, or whatever the current market price is right now. I wouldn't say the best price, the market price. So if I click on that box and I hit exit trade, it's going to go in and fill at whatever the current price or fair value of the market is right this moment. And that's probably not a very wise choice when you're exiting a trade at profit. Why? Because market makers will probably try to take advantage of that trade. So what we want to do when we're exiting with a nice target profit is we want to avoid the market order. We could use a good till canceled, but we would avoid the market order at this time. The only time you're going to use the market order is if you are forced to get out of a trade because it's reached a high P factor. If I'm at a 40% P factor, I want to get out now. I don't want to wait for 10 minutes or for an hour. I want to get out now because I feel like if I can get out immediately, I'm going to lessen the loss on the trade. I'm going to lessen the damage to my account. So anytime you're exiting a trade that's hit a 40% P factor, we suggest using that market order. It also has something called time discretion, and I'll let your personal trade representative explain what time discretion is, but it essentially allows them to kind of work that order, even though it's a market order, try to wait for the best possible price to get you out at. And then down below here, I have the exit date, and I have a button that says exit trade. In order to exit this trade, all I have to do is click on that exit trade button, and everything processes, and it tells me that it's submitted a request for this exit. Once the request is submitted, I wait until the trade gets filled or gets exited. If it's exited, I will receive confirmation via email, text message, or phone, depending on how I've set up my my different settings within the software, and it will be placed under the closed trade section of the website. Okay, so once we have closed a live trade and it actually gets executed in the market, it's going to live under the My Trades button down here where it says Closed Trades. Everyone already knows where this is. We talked about it when we were talking about paper trading and back testing. So it's going to live under there. That's where you're going to be able to see a list of all your trades depending on the year. They'll all show up in that section. Okay, the next slide is commission rates. And you'll notice at the top it says round turn. Because we're trading options on an index futures contract, we are using the same type of commission structure, I guess, that they use in the futures market. And most futures types of trades are round turn trades. What that means is you pay when you go into the trade, but at the beginning of the trade, you pay for getting in and for getting out, which means if you exit the trade early, there's typically no additional fees charged to your account. So if you look at this screen, there's a couple different brokers here. We're trying to kind of show you a comparison of some different brokerage firms that you might know of. And these brokerage firms, and by the way, this was verified on August 21st of this year, 2014. But the different brokerage firms listed here are Option IQ. So the company that actually provided you with the software also has a brokerage firm, and that brokerage firm is hooked up to the software. So anything you do in the software, it automatically executes with that brokerage firm. So you have the option of using that brokerage firm. That brokerage firm has a dedicated trading rep, and you're going to get the dedicated trading rep to work with you each and every day on those trades to make sure you're using the software right. If you have questions about setting a trade, exiting a trade, that dedicated rep will be there to help you. The rate for Option IQ to place a option, so if you're buying a call or you're selling a call or you're buying a put or you're selling a put, is $5.25 per option, and the fees are included in that price, so it's a total of $5.25. If you look at E-Trade, which is another potential brokerage that you could use, however, the software is not hooked up to that brokerage, so you'd have to go back and forth. You'd have to go in and type in and execute the order in E-Trade. But E-Trade charges an extra fee for a dedicated representative. Their rate is $5.98 plus $2.24 in fees for a total of $8.22 per option. Again, this is options on index futures. Charles Schwab, which is also, probably everybody knows about Options Express, is another brokerage firm you could use. They do charge an extra fee for a dedicated rep. It is also not hooked up to the software, so you'd have to toggle between the screens. Their rate is $7, fees $2.34 for a total of $9.34. And lastly, everybody knows TD Ameritrade, the old Thinkorswim platform. They also charge an extra fee. Our platform, the Option IQ software, is not hooked up to the TD Ameritrade execution platform. So again, there you would have to use two different systems, enter your orders, exit your orders through TD Ameritrade, and manage everything or watch everything through the Option IQ software. So they also have an extra fee for the dedicated rep. The rate's $4.50 plus their fees of $2.34, which gives you a total of $6.84 per option. So again, you can see that Option IQ compared to those four is very competitive. In fact, cheaper than those four, I would say, very big brokerage firms that are out there. So again, Option IQ has tried to make it easy to open an account with them and participate with them. In addition, you'll get the dedicated trading rep, and you'll also have the ability to execute things right from the software platform. You're not going to have another screen on the internet open where you place the trade. It can all be done through the one screen. So that's the commission rates. Okay, what I want everyone to do now is I want you to spend time setting up an active paper trading portfolio. What I want you to do is go in and I want you to set 10 paper trades together. So, or not together, well, we'll do it together, but I want you to go in and do this so that you can continue to paper trade while your account's getting set up and funded. This is going to allow everyone to go home from this event and actually watch potentially real trades. You don't have any money in your account, but they're trades that were recommended by the system that you can see live each day how they actually perform in the live market. So this is going to give everyone a chance to really kind of start out with 10 paper trades as their little active portfolio and watch those trades each and every day to see how they're doing. So how do you do that? How do you set up those trades? Let me just go back to the software here. And what you're going to do is you're going to go under My Trades, click on the Set New Trade page, and it's going to bring up today's live trades. Now, because today's trades are live, we cannot paper trade them unless we go back to the previous day. So all trades can be executed in your paper trading account if you go back one day. So today, it shows on here as 9/10, If I go back to 9.9, you'll notice all the trades here say live trade on my screen. If I go back to 9.9 and say get trades, it's going to go retrieve those trades from yesterday, and all those trades are going to say paper. Why? Because they're not real trades that I can place right now in the live market, but they're just trades that you could have placed yesterday. So you just have to go back one day to paper trade moving forward. So I'm just waiting for the screen to populate here. Once it does, we're going to go in and show you how to set these. I want you to set 10 of these in your test account to be able to kind of watch these over the next 30 days or so. So here I see the preferred trades at the top of the screen. Again, this is what we taught you to do. We want you to take the preferred trades. So depending on which one you go with here, you're going to come over to the far right-hand side, and you're going to click on the button that says paper. Once you click on the button that says paper, it's going to bring the trade up for you. And everyone knows how to set this trade now. It's pretty simple. But one of the things I want to remember about this trade are my strike prices. I'm selling a 21.20 call and a 17.80 put. The reason why I wanted you to look at those and remember those is because I don't want you to set another trade with those same strike prices. Okay? We want to diversify. We don't want to have all our money at one specific price in the market, because if that trade hits a 40p factor and goes bad, and I've got a bunch of trades at that same level, then I'm going to lose more money during a bad period of time. If I'm diversified, then I have a much better chance of the market. It might hit some trades and I might lose on some, but I might have some that are spread out so far that the market never gets to that level, and therefore those trades expire profitable. So remember the 21.20 and the 17.80. Then we're going to go in and we're going to choose our test account number here at the top, and we're going to hit the button that says Set Trade. Now, because I'm setting this as a paper trade, I'm not going to see anything today. So this particular trade is now essentially set in my account. If I go under the Active Trades page, this same trade's going to show up there. So I'm going to scroll down here. Here it is, 21.20, 17.80. Because today's the day I'm setting it, I'm still underwater, about $16 for the commissions for that trade. But that's where I can watch that trade every single day going forward. So that's one trade. I want you to go in and do this 10 different times. Now, because yesterday was just one day ago, we could go back over the past week or 2 weeks and set trades there. But what I want you to do is go in and fill up your account. So go back to My Trades, click Set New Trade. Oh, real quick, remember 17.80 and 21.20. So let's go back. 17.80 and 21.20. We don't ever want to set that same one twice. So we're just going to go back here to the Set New Trade page, and we're going to make sure we never do the 17.80, 21.20 again. So I'm going to go back a couple of days. Let's go back to the 2nd and get trades from the 2nd of this month, and let's see if there's something different than 17.80 and 21.20. So give it a second to come up. Here it is. Okay, now we come down and we look at all the available trades. The preferred trade for that day was 18.10, 21.10. Is that different on both sides from what I previously set? The answer is yes. Now remember, we want to be at least 5 points different on the top, and on the bottom at least 10 points different. So this particular trade would fit in perfect. So I come over and I click Paper Trade. I bring up this screen. I select my test account, and I hit Set Trade. So it's real simple to set these up. I want you to set 10 of these up over the past 1 to 2 weeks. And I want you to watch, and if you can't get 10 on that are diversified, then I want you to wait a couple of days and set a few more over the next couple of days. But what I want you to be able to do is have an active trading account on this page here. Here's the one we would have set. You'll notice 17.80 and 18.10. Those are different, 21.20, 21.10. They're at least 5 points on the call side and at least 10 on the put side. So that's all you have to make sure you do. Go set 10 of those and watch them for the next 30 days or so while you're setting up your account. This is going to give you real experience as to what's happening in the real live market to these trades. Now again, these trades are paper. You don't have any money in these ones, but it's going to give you, it's going to make it feel or simulate what it would be like to actually be in these trades, as a live trade. So that's your homework, essentially, is to go back and set 10 of those, and I've shown you the process of doing that. As you do that, each day you're going to log in and you're going to monitor these trades. Make sure your P factors never reach 40. If your return on target ever reaches 70% or more, start looking at a possible exit. Let's talk now about our key relationships. So Option IQ has some key relationships. Number one, Option IQ is an introducing broker, as I said before. So we also have software, but we can also place the order for you, service your account. So we have the ability to do all of that. However, we do not hold your money. We don't hold any of your trading account funds, and we don't clear any of your trades. That's done through a clearing firm in Chicago called R.J. O'Brien. And R.J. O'Brien is a clearing firm that has been in business for 100 years this year. Started in 1914. And because they've been in business 100 years, I consider this company to be a great company to work with. They will hold your money. They will clear your trades. They will be the ones that are sending you statements anytime you do anything in your account. So as a FCM, or a futures commission merchant, they are responsible for clearing all the trades for various IBs, and we just happen to be one of their IBs. They hold your money, and they're accountable for keeping track of every cent made or lost in your account. They're also responsible for the year-end tax statements. So R.J. O'Brien is who you will, if you choose to work with Option IQ and set up an account with Option IQ to trade, that is the clearing firm that you'll be working with. Below that, you also have an IRA custodian. If you choose to trade retirement money, this could be a previous 401k that you had with an old employer. This could be a current IRA of any kind. You need to use an IRA custodian to be able to set up those accounts. The custodian company allows you to use your retirement accounts to trade the Option IQ strategy. Through them, you set up what's called a self-directed account, and then you're able to use that money in this. So for those of you that are trying to decide what funds do I want to use to trade the Option IQ software, those retirement funds are a great place to look. And then lastly, the exchange. The futures exchange is where all of our stuff is done, and that is a regulated marketplace where futures and futures options are traded. It says here, exchanges, FCMs, and IBs are all federally regulated by the Commodity Futures Trading Commission, also known as the CFTC. Next, let's talk about self-directing, okay? So this shows the relationship flow. So over here on the left side, you see you and your specialized custodian. So once you get your money over to a retirement custodian that allows you to do what's called self-direct your retirement account, you're going to send your funds from them, or they're going to have your money, and then they're going to send it over to R.J. O'Brien. And R.J. O'Brien, just so everybody knows, I didn't mention this, but they clear trades for J.P. Morgan and for E-Trade. So it's a very reputable company. So the money goes to R.J. O'Brien, and then R.J. O'Brien allows you to trade the Option IQ software. But all your money remains with R.J. O'Brien. That's where all the trades are cleared. They are the clearinghouse. So that's kind of the relationship flow when you're using actually cash or retirement accounts. So what types of accounts can we set up? You can set up an individual or joint sole partnership account. You could set up a trust account, a partnership, a corporate or LLC account, and again, any type of retirement account that qualifies can also be used. So let's discuss how to self-direct a retirement account so that you can use your IRA or your 401k funds to trade the strategy or the software with. We're going to talk about setting up a self-directed account and then completely doing a transfer, using a transfer form to initiate moving that money from where it is today to this self-directed custodian. There's a lot of custodians out there that can help you. We can recommend some of the best custodians for you to work with. I would speak with your trading representative, your dedicated trading representative for that information. So how does it work? Well, in a traditional sense, you and I have money in retirement. It could be an IRA, it could be a 401k. This could be a 401k with a previous employer. This could be an active 401k with an employer. Well, today, each and every one of us realize that if we touch our retirement money and we try to use it for some other investment, like investing in these trades that Option IQ software is telling us to invest in, we're afraid that we could incur an early withdrawal penalty, or we would also incur a tax penalty. And the reason for that is because we all understand this is our retirement money, and we see here that we've got this big, we'll call this a wall or a barrier that separates us from our retirement. So if I reach across this barrier and grab that money and put it in my pocket, I definitely will have an early withdrawal penalty and I'll have a tax consequence. However, when we're self-directing a retirement account, we're not actually reaching across that barrier. So in a traditional sense, what do? We have a broker or some other custodian that holds our money. They allow us to invest in things like stocks and bonds and mutual funds. And depending on how we do with those investments, money flows into or out of our retirement account. But with a self-directed account, we actually change things just a little bit. Again, it's very similar to a traditional sense, but with a self-directed approach, the first step is we don't have to use the current broker we're using today, and we most likely won't use the current broker we're using today because they will not allow us to self-direct our funds. So first, we have to move from where the money is today over to a specialized custodian. And as I said, there's a list of custodians that we can give to you that you can contact. The specialized custodian allows me to self-direct the retirement account, and I can invest it in anything that the IRS allows. And one of the things the IRS allows is you to put money into the types of trades that the Option IQ software is recommending. Once you change from your current broker to a specialized custodian, you can actually trade different things, not just the traditional investments like stocks and bonds and mutual funds, but now you have different options like trading options, trading futures, limited partnerships, trading forex, real estate, hedge funds, private equity, precious metals. So using a specialized custodian essentially unlocks your retirement money so that you can invest it in what you want to invest it in, so long as you follow the IRS guidelines. Again, the reason why you use the specialized custodian to do this is because they are educated in all those laws and they make sure that you do everything on the up and up. So that's how you set up a self-directed account. It's pretty easy to do. Now you'll notice during this entire process, did you ever reach across this barrier and pull your money and put it in your pocket? The answer is no. That is a self-directed retirement account. Now, everyone always asks me, do I have to self-direct all my money or can I do just part of it? And the answer is you can do part of it. You could take part of the money that you have with your broker or custodian, wherever it's at today, and you could move some of that money over to the specialized custodian. So you could keep doing what you're doing with your current broker with stocks and maybe bonds or mutual funds, and then you could move some money over to a specialized custodian to do Option IQ software trades or additional investments. So I just want to make sure everybody understands that. Real simple to do that. Lastly, funding your trading account. So with Option IQ, it's easy to fund an account. You can wire transfer into the account. That money goes to R.J. O'Brien, the clearing firm, not to Option IQ directly. It goes to them. They put it in their account, and they clear all your trades and keep track of everything. Any deposits that are made in excess of $100,000 have to be made via a wire transfer. And then you can also put a check into your account. So when you send a check in to fund your account, you need to make sure that the check is being written from the same account under which the trading account is set up. So if I set the account up under my LLC name, my trading account is ABC LLC, the check that I'm writing out to fund that account has to come from the checking account that belongs to ABC LLC. If you don't, the check will be sent back. So this is a precautionary measure for what's called money laundering, and it's something that we take very seriously. So when you're setting up an account and using a check to fund the account, make sure you follow that advice. Lastly, withdrawing funds from your account. You can withdraw funds or money from your account by contacting your assigned personal trade representative and having them send you either a wire or a check. And you can get access to your funds very quickly. This type of Option IQ trading is very liquid, so they can pull you out of trades and send you money literally within a day. So it's very flexible. The other thing, and I want to make sure everyone understands that Option IQ is not, and me, I'm not a tax professional, so we do recommend that you seek advice from your accountant or tax preparer. But the proceeds from Option IQ trades are treated as 60% long-term capital gains and 40% short-term capital gains. Now, I touched on this quite a while ago in the workshop or in the class, but I want to make sure that everybody recognizes that that is how all proceeds from Option IQ trades are treated. So at the end of the year, you get a 1099 that tells you what you did for the year. 60% of that is treated as long-term capital gains, and 40% of that is treated as short-term capital gains. For more information on that, make sure you check out the Internal Revenue Code, Section 1256, titled Contracts Mark to Market.